Good morning, everybody. Good morning, everybody. It's October 9th, 2023, starting the live stream. This is our pre-market prep. Give you an opportunity to set your levels. I just want to make sure everybody gets a good idea of what we're looking at. And we'll get started here in about 10 minutes, okay? So get your levels set and get ready for our live trading room session, okay? Good morning, everybody. We'll get started here in about 5 minutes. Have the prep screen up here for you to go out and set your zones for the session today. And we have a few more smaller zones from the overnight session that we'll be talking about as we get our morning started. Okay? Get started here in 4 minutes time now. Good morning, everybody. Go ahead and get started here. This is the Market Institution Live Trading Room, October 9th, 2023. The information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained within this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees of the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, and any trading strategy. We're using real-time market data and will be executed trades in a simulated account during our presentation. No offer on our part with respect to the sale or purchase of any security is intended or implied, and nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional purposes and educational purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results. We make no promises, guarantees, warranties suggesting that any information shared will result in a profit and not in a loss. You agree not to hold us legally or financially responsible for any reason. All right. Good morning. October 9th, 2023. Indexes are all starting off as an inside day with a small Globex range, okay? And what that means to us is, at first glance, is that we should have some longer running trends today with a narrow or small overnight range. But inside days often mean that that trend may not start till a little bit later in the session. War between Israel and Hamas broke out just as the Jewish holidays came to a close. Really poor taste, but in war, nothing is right. Columbus Day in the U.S. markets, banks are closed banks are closed along with the bond market. Although the bonds are moving a little bit in the pre-market, and we want to take note of that as far as the futures moving around. I'm going to bring that picture up over here. So for the 10-year yield, okay, we've just seen some big gaps down, okay? Now this generally will send the equity indexes up, okay? Let's see. Am I speaking out there? Can everybody hear me? Okay, good. Yeah, sometimes I'm not sure if everything's working. Little new to using OBS platform and YouTube Live and things like that. So it's only the second week we've been doing that. So, okay, thank you. Yeah, you may have to crank the volume. I'm not sure why things are that way, but we'll figure it out. All right, so let's take a quick look at the news. Okay, basically, the headlines are changing a lot, also implying the increase in oil prices. Now, the demand for oil is still there. If Iran does not produce the oil, then that goes along with more oil shortages and higher gasoline prices. Okay, a lot of attention on this. Generally, the reaction when a war like this breaks out, and it is just very important to understand all the things that Israel brings to the U.S. as far as technology, metals, medical devices, biotech. There's a lot of U.S. companies that are, or a lot of companies that are from Israel that are traded on the in our markets, okay? So especially around biotechs, pharmaceuticals, technology, okay? So there is going to be an impact in the marketplace. But with the banks being closed today, you may have a move that you're not expecting. That doesn't mean everything is good for the market. It just means that a lot of the folks that are still coming back into the markets after the long holidays for the Jewish holidays, as they come back into the marketplace, they still have to unwind and get the market back online. That doesn't start till tomorrow. We also want to be prepared that earnings season is also starting right now. There's a lot of things that are going to impact this market as far as going forward into the end of the year. Okay, so just stay tuned. Each morning we will be covering these things. It is important to understand the trading tips of the day and how we use this information. As we come out to the charts, let's look at the equity indexes. It's going to be a little bit dicey here in the morning. How do we know that? Well, when we look at the prior session's range, the high and the low of Friday's session, we can see that we're smack in the middle of that. You can see that on a daily chart, okay? Notice the volume on the Dow 30 stocks. We're 25 minutes away from the market open, and the volume is very, very light. Okay? Light volume, high volatility. Okay? Now, very often, when price gaps up or down inside the prior day's trading range, and it is still an inside day, those gaps have a very high percentage of filling the same day. Okay? That, and along with the 10-year treasury, 10-year yield dropping as it is, and we just pointed that out, that would also lead to price going up on the equity indexes. Okay, so there's multiple things outside just a price chart that are implying that the market should move, the indexes will move up today overall. Okay, filling the gap, move up. We also track the Globex range. Okay, the high and low of the Globex range. We compare that Globex range to that daily ATR, which I have down in the lower corner, where I have a daily chart on a continuous S&P futures chart, okay, daily. The daily ATR is 64 for the S&P, okay? Right now, currently, the Globex range is 23, 23.75, okay? Now, that is less than 40% of the daily ATR. We call that a small range, small Globex range. What that means to us is that we have longer running trends during that time, okay, during the session. Often when we have that small, narrow overnight range, we have long, Globex range, excuse me, we have bigger trends during the day. A wide overnight range, we would look for the bear trap and bull trap and market volatility, change in direction. And we also have that normal range, anywhere from between 40 and 70% of the daily ATR when we compare to Globex range. That would imply that the market's going to be a little bit choppy. Now, also in our observation of an inside day, okay? And what we refer to an inside day is right now, current price has not broken the high or the low of the prior session. Still trading inside, okay? Now, trades often manifest a little bit later in the session. Now, with all the news and things going on and people pulling back right now from the marketplace, we might also see that there's some additional volatility, okay? So with price opening up inside the prior session's range and not broken the range, many of the longer running trades will happen later in the session. So what is later? Anywhere around 10:30, 11 o'clock Eastern time is when we will find some of the higher probability trades. Now, also, as a rule of thumb, for me, for marketinstitution.com, is that when the indexes are inside the prior day's trading range, we take the breakout trade off the table because they often fail and can be very whipsaw, okay? We're waiting for a zone entry. We do have some smaller time frame zones on the S&P. I also would like to take a moment to clarify for everybody that's watching the videos, our prep screen zones are qualified a little bit differently than the zones I have marked in black. So the zones that I have labeled prep screen zones, they are zones that have been created during the regular trading hours. Some of the other zones that I have marked on the chart were created during the overnight or extended hours session, okay? Not all zones are created equal. Zones created during the regular trading hour often happen to have a little more institutional participation, okay? So as price breaks down, let's see, we got 8 o'clock, so that was still in the pre-market. We do have a small time frame zone down about 42.85, 42.77, okay? Very small, it's like about a 2-minute zone. I also want to point out the leg-based group of candles just a little bit lower, right in this range here, okay, on a 20-minute chart. You can take this range, I'll do it with you right now so you know how to do it, okay? This area has been tested once, okay? Now we created a new leg-based group of candles. Based on where the resistance area is, okay, based on this buy territory that I'm outlining right now, okay, we did not make a higher low going into the breakout. We actually made a lower low, as you're going to see right here, okay, using that structure inside the buy territory. When price makes that lower low, often the zones are a little bit closer to the pivot point, okay? Now, the setup that we had over here, same scenario, no higher low before the breakout, okay? Price went deep in the zone, okay? This area has been tested twice, the lower part of it, okay? So take the moment, and I'm going to do it with you. I'm going to put the little blue dots on the chart. We're going to look for a leg-based group of candles inside this area to minimize the risk or the size of the zone. We're dropping down to a 10-minute. 10-minute didn't change the zone size, okay? So let's drop to, I'm just randomly going down, 8, 7, there we go, 6-minute chart, okay, helps us see that there is another leg base inside of that range, okay? Now what that did, by going down in time frame, we were able to reduce the size of the zone substantially, okay? And let's go back out to the 20-minute. Clean up our chart. Okay, with the narrow or small overnight range that I've described here, by comparing the Globex range to the daily ATR, okay? A perfect world scenario, as you were to visualize price moving around, okay, this morning and a lot of uncertainty, is in a perfect world, what I would be liking to see is that price drops down into the 42.66. Okay, we may get a bounce around the areas here later on, come back up and feel the gap. Since we're inside the prior day's trading range, we only take zone entries, no breakout trades, okay? And then potentially from there, if a new demand zone or a new leg-based group of candles has formed, then we'll get a pullback or price will go back up into the higher levels, okay? Now, as far as the timing of these things, price dropping into a demand zone, I would like to see that happen or trigger either one of these around the 10:30 to 11 o'clock Eastern time, okay? Now, price gapping up or down inside the prior day's trading range, very high probability we fill the gap. The other scenario is that price goes up and fills the gap in the morning session and then comes back down to find buyers. Okay? In the pre-market, they're looking for buyers and sellers to make a market. The very light volume implies that they haven't found all of them yet. Okay? So things could get whipsaw at the open. And I want to caution everybody to stay as conservative as possible as the market shifts out. There's a lot of things that are going on, including, not to discount the war, okay, but bankers are coming back into the marketplace trying to figure out what they're going to do, how they're going to manage risk. Will they start unwinding their hedge now, or are they going to wait a day or two? Okay, that's what we still have to watch for. NASDAQ, the same thing, very narrow overnight range. Small time frame, leg base group of candles, okay, with the smaller structure. We have our 3 touches of resistance. And we have our buy territory down below. Price made a lower low before it took out all the sellers. So we're looking for a zone that is closer to that pivot point. 14,741, 14,759, okay? This zone was created in the overnight extended hour session, okay, early mornings, okay, so we need to wait for price to come back down to that. Noting that the NASDAQ is also inside the prior day's trading range, potentially looking for a gap fill. We see that the stocks are down in the pre-market as far as the NASDAQ stocks, so there will be a gap down, okay, and we need to see if there's going to be a rally back up. So again, a perfect world scenario with a narrow Globex range, very narrow here, okay, is that we have longer trending trades often happen during that session where we have a narrow or small Globex range. Dow, also 197. Let's see, what's the daily ATR? Oh, it's 60 minutes. Daily ATR on the Dow is 415. Okay, so we're at 200, so we're a little bit less than 50%. Okay, so the Dow may be a little bit more reserved. I want to point out that this small time frame zone, 33,261, 33,199, is inside of a dead space. Dow also has a potential, if it does start to move down, that it takes out this area quickly and comes back down to the support area. Okay? Thanks, Chris. Chris Grimmett also just posted that the TradeStation has suspended the day trade rates. That is also an odds enhancer that the brokers are afraid of some big volatility, okay? So using that information, okay, that the brokers have reduced the intraday margin, okay, is also that odds enhancer that pending volatility around the session open, okay? I do want to bring up economic reports today. Again, pointing out the U.S. Columbus Day, banks and federal offices closed, stocks open, bonds are closed, okay? We do have Fed Chairman that's been speaking for 19 minutes. There was no detail on that, but that's what we have, kind of a light day as far as, well, no more economic reports. Investor Movement Index doesn't have a large impact on the market, but we'll keep an eye on maybe that has changed. So around 12:30, that report comes out, okay? You want to learn more about what that report is, just click on the words, identify what the definition is, and why should you be watching it, okay? Investor Movement Index, IMX, is a proprietary behavior-based index created by TD Ameritrade designed to provide insight to mainstream sentiment. Mainstream is another word for novice. Okay? Novice sentiment. Measures what investors are actually doing and how they actually position the markets. The IMX does this by using data representing holding positions and trading activity and other data. So again, this is one of those pieces of information. What you need to find out is how often does this information come out? Okay? Does this come out each week? Does it come out every month? Okay? And if it comes out every month, this is what's reflective of last month, not what's reflective of this month. So why do we care? Well, Wall Street often looks to TD Ameritrade, one of the largest online brokers, novice trading platforms, for insight into the mood and sentiment and behavior of novice traders. Okay? Now I am switching up the words so that you can understand that they are monitoring all of our movements, and they have a lot of indicators and oscillators and things like that to monitor the behavior of novice traders. They use that information to help fulfill their orders, okay? So we must also pay a close attention to how these numbers impact the market, also impact behavior out there. So get into the details, understand each economic report. Now, you don't have to do that in one sitting. But each time that you come out here and say, oh, what are wholesale inventories? Preliminary, what does that mean? How does that often impact the market? Is it a market moving indicator at this time? Okay. Now, I'm not going to go deep into this pre-market routine things, but I do want to provide you with guides here to help you research the information. Okay. Find out for yourself. Do not rely on somebody else's information, including mine. I can guide you and show you the resources and why it's important to monitor those things. But again, ultimately, once you research it, it becomes your information, okay? And that's what you trust when you come to trading, okay? All right, internals in the pre-market. Let's bring up a couple of things here. We always want to see what the trend, pre-market trend is doing, okay? Pre-market trend of 1.300, okay? Now the trend measures the upticks over downticks, up volume over down volume, kind of divides it into each other and such. But basically, if the markets are dropping and the trend is high, that's a positive divergence for going long in a demand zone for the equity indexes. If the trend is low and the markets are ascending, okay, then trend is low, time to go. We're looking for a supply zone. Trend is high, time to buy. We're looking for a demand zone. Right now, we're in the upper part of that, 1.3. If the trend gets above 1.5 or 2, often we have some bigger movements in the pre-market, okay? Implies that the buyers are coming in, okay? If the trend is low, it implies more selling activity. Now keep in mind the dollar also reflecting a move down on the last 45-minute chart, okay? Indexes are inverse related to the dollar with a lag. And just to reiterate, bonds are closed, so the yield, I'm expecting to be closed as well. The yield is also one of those big odds enhancers we've been using lately to help us anticipate what the market's been doing, okay? Crude oil, yeah, it's in the news a lot, okay? Great possibility for it to continue to move up. Okay, we have, I missed the open range breakout. We can still participate in the open range breakout above 86.25. Okay, but to the downside, we're going to have to wait for a demand, 82.71, 32. Okay, so I'm going to place this order on crude. We have 91.21, which is the potential supply zone on a larger time frame. Okay, all of this move down was on OPEC cutting OPEC meetings last week that were cutting production. Okay, so the implied when they're cutting production, the index or the crude oil should have gone up, but it did keep going down. Okay, so I'm going to set the trade to continue that long trade opportunity at 86.26. I'm going to place that order out there ahead of time. This one contract. As price, once that trade is triggered, I'll come back in and place a protective stop loss order. Okay. Initially, if you want to set that stop loss, then use this last pivot low, 85.57. Okay. Just to have something there. Okay. If you're going to take that breakout. Okay. Current trade that I have was looking to take a long on wheat. Okay. Right now I have no open positions. So I have a long setup on wheat, looking for a breakout about 580 and 2/8. Okay. And looking for the other side of the dead space here. Target up about 592. Okay. Gold got a nice gap up. Remember the position of the gold price from the daily chart. Price is using this range. There seems to be some unfilled orders still at this area. Okay, so price broke out. We do have a little base rally. And we could look for re-entering that on the small time frame about 1846, 1842. Now at the moment I don't have a, price is not there to enter the trade long. And I don't have enough of a base to take a breakout to the upside. Okay. Nat gas, larger time frame. It looks like Nat gas is finally trying to put in a fresh accumulation of orders. Okay, so I have this on a 480-minute chart, and we'll see how this starts to play out. Okay, I also have a tick chart, so I'm not looking to do much with nat gas today. Okay, so it's a couple of the agricultures. Soybean, looking for a break, a long trade above 12,000 or 1,277 and 4/8. Okay. Okay, Globex. Okay, 2 minutes away from the market open, so we did break. We haven't broke the Globex because the Globex doesn't finish until 2 more minutes. But yeah, let's keep double check on that Dow. Okay. Equity indexes, I'm going to pretty much shy away from at this point. Okay. Why am I shying away from the equity indexes? Well, the inside day, light volume at the open, going to produce some high volatility. I need price to come down to a demand zone in order to participate. I do anticipate having some longer running trades today once prices come back down to the demand or supply area for me to participate. Reason behind my expectations is the small or narrow overnight Globex range compared to the daily ATR. Okay? Just want to keep bringing that up. So currently I have a trade set up on wheat, looking to go long. Sugar, number 11, also in a supply zone. I do have delayed data on this, so that you need to use your own charting. Live cattle, lean hogs, also looking for demand. And it looks like live cattle had a big gap up this morning. Platinum has pulled back to a zone, and also bean oil coming back down. Okay. Swiss franc breaking out to the upside. Okay. Also the Japanese yen. Let me grab the Swiss franc. Using the Z contract, SFZ23. Keep in mind, if you're going to trade the Swiss franc, make sure you identify where your stop loss is at by using the leg base group of candles. Okay. All right, so I'm going to take it 63. Yeah, we'll come in just before breakout. We don't have much in the way. A little speed bump. If you're going to look for a target, we do have a leg base, not a zone, but just an area for a target. Looks like 325. Okay, so we'll watch for that. Let's label that. Okay, so we got a trade set up on Swiss franc. And here comes bean oil coming around the far outside. Let's go get bean oil. Trading a December contract, BOZ23. Bean oil coming back down to demand.
Order filled.
Stop loss 5506. Okay, so bean oil underway. I'm going to change the color of the background just so you know we're in that trade. Okay, Swiss franc, we're still waiting for. Platinum did come in the zone. I'm not a big trader on platinum. Okay, but it has triggered, came back into the zone, and along with the bonds and things being closed, metals may get that move up along with the equity indexes. Okay, corn is also on deck, 484.68, 482.18. Wow, nice trade on that so far. Okay, we're up about 90 bucks on bean oil. Okay, nice little entry. Now, on inside days for the indexes, we do look for choppier market conditions and shorter term profits. Okay, so I'm only going to give this a very short period of time to get into to take a profit on that. Let's see what our index is. Indexes are still in that tight range. Inside day, NASDAQ looking to break lower. Breakout trades are off the table as far as my trading plan. Okay, but if it's part of yours, you could still participate. I am waiting for price to come down to demand. Wow. S&P up, NASDAQ down, Dow up. Almost time to fill the gap. Let's look and see if there's any leg base up in this range. 2019. Like 16-minute. Does have a leg base group of candles. Okay. And Dow looks like it's going to be one of the first ones to fill that gap. NASDAQ going the opposite direction. Russell, okay. Also, let's double check this area right here towards the session close. Let's see if we do have a leg base group of candles in that range. Also on the 16-minute chart, we have that leg base group of candles. Now you can continue to go smaller time frame, okay? But notice we get that gap fill and there's a zone right there on the 16-minute chart, okay? That's where we would look to see the gap fill and then fade that gap off of that area. Again, price is not there yet to make a trade. All right, bean oil paying out pretty good for us. I do want to remind everybody that these charts are posted in the Discord room prior to our session open. Okay? Now that'll be going on for a period of time until we get some other things organized, and then we'll be posting them on the web page. Okay? I just want to make sure that you guys are getting some decent trade opportunities and decent setups. I'm not trading this one, but I am watching it. So we have an open trade on the Swiss franc for a breakout to the upside. Looking at the Japanese yen, it has broke out. If it does pull back a little bit more, then we'll look to enter into that one as well. Wow, almost $200 on that one. Anybody get the kind of the boring agriculture trades? Bean oil. Nobody trading bean oil. Bummer. All right. Well, this is, since we're still expecting that volatility in the marketplace, that is a nice, decent little trade, a couple $100. I'd like to see it hit that volume weighted average price from the session, or the overnight session as it started. But I'm going to go ahead and jump in and grab my couple $100.
Order filled.
All right, nice little trade there. All right, so what else do we have? Weekly charts on the bonds. Okay, remember the bonds are closed today. Bond futures are open. Bond pits are closed.
Order filled.
Okay. We just got filled on crude oil. Okay, crude oil, we're looking for that breakout. If you want to be a little more conservative, you can take the breakout above the resistance. I chose to use that first 5-minute candle and took the open range breakout, anticipating that move up to 91.21 as we see some of these things unfold. 85.90 is where I'll place my protective stop loss. Okay, and you may want to reduce your time frame down to a tick chart or something if that zone is too big, or trade some micros. Dollar continues to drop at this moment. Okay. Taking a look at the equity indexes altogether, we see the Dow has moved up. Russell's moved up, S&P has moved up, but not a lot, and NASDAQ. Remember, with the equity indexes, 10:30, 11 o'clock is where we're looking for our trade opportunities. Price gapping up or down inside the prior day's trading range and that inside day, often the better trades happen later in the session, okay? Don't get chopped up in it. We've been documenting this information for a long period of time. We reiterate that information each morning during the pre-market so that it starts to get ingrained and you document it yourself, okay? Okay, yeah. So 86.42 would be the breakout of the that consolidation for the overnight, okay? And yeah, I just have one contract on CL. Let's come back and take a quick look at the indexes. Nothing really going on here with the S&P. NASDAQ is quieted down again as stocks still try to find where their footing is at. But let's get the Dow set up. Okay, Dow futures set up, zone entry, inside day. Okay, 33,677. Still way up there. Okay, taking a couple of micros, 33,677, and I will place a protective stop at 756. Maybe more elevated risk. Let's go out to our tick chart on the NQ. This is pretty much a pretty narrow overnight range. A lot of consolidation right there as we start to build a fresh accumulation of orders. S&P on the tick chart, slowly grinding back up. I don't have my 3 touches. I don't have my setup, okay? Price gapping down. You know, notice that price did gap down right into this range here. Did anybody look left to find out why? What was there? Was there anything there? Okay. If there was no leg base, there was no buy territory in that range, it has to build a fresh accumulation of orders in order for us to enter the trade. Okay. Now the bank stocks, okay, the banks are closed, but the bank stocks are still trading. Okay. 1-day volatility index has gapped lower. We're still waiting for them to see what's going on with that. Okay. Back up to resistance on the NQ. Dow pushing up. Russell. Okay, nice exit on bean oil. Looks like it's still just a little bit below that volume weighted average price. Yeah, just looking around. We still have a trade set up on wheat. We have a trade to take on Swiss franc. Not filled on that yet. Corn waiting for a pullback, 484.68, 482.28. Platinum getting a small bounce out of the zone, 82, or 882, 876 range. Okay. This is not one I particularly trade, but I do monitor the chart patterns and the setups always. Oh, let's see. Okay, the indexes are, NASDAQ is now coming online. With a potential breakout trade. Now, I will caution you, breakout trades on inside days are you got to be quick, okay? They're not very reliable. Turn the time frame up or down, find your leg base group of candles. Recognize the risk that you may have to take on that breakout trade where your stop loss is almost 31 points below the breakout portion, okay? I'm not even going to attempt it. I'll watch it. We'll monitor it. Another thing that we teach in the Mastering the Charts, okay? Now, we do have the Mastering the Charts course coming up at the end of the month. The link to sign up for the Mastering the Charts is now active on the website, okay? And more things will become active here shortly as far as anybody that wants to subscribe, because this is our last week of, putting it out there and doing it for free, okay? Just during our transition time. All right, so I have a leg base group of candles over here, okay? That's where I'm going to look for various targets, okay? Often when we have a gap like that, you look over to the left, you find your leg base group of candles where other orders were being filled, and sometimes that demand area can become a supply area, especially in a gap scenario. How about that? How many saw that breakout failing? Inside days taking breakout trades are very elevated risk. Notice how it just popped up and then sold right off. Just trapped everybody into it, okay? This is why on inside days, we wait a little bit longer before we start, and we only take zone entries, not breakout trades. So if you got hit by that, lesson learned, okay? Sometimes some of you folks have to touch the burner to realize that it is hot, okay? Market's still trying to find its footing. Let's take a look at all the large market cap weighted stocks here. Yeah, notice on that breakout that when you look to the left, there really wasn't any speed bumps there either. Just the inside day getting those breakouts and then pullback, okay?
Order filled.
What did we, oh, we got stopped out on crude oil. Ouch. Okay. Crude may be volatile. I'm going to still look to go long crude. Okay, 86.42. It looks like I'm going to have to wait a little bit. Okay, wheat has pulled back. Soybean meal looking to go a little deeper into the zone. Soybeans also pulling back. Yeah, it was a nice profit. Basically just offset the bean oil just offset my crude oil trade. We still have an open trade on Swiss franc and an open trade on wheat should the market want to move back up. And an open trade on Dow. Since all the indexes are inside the prior day's trading range, we are looking and anticipating that gap fill. Okay. Let's take a quick look at the S&P futures compared to cash. So we have the cash market, which is the Dow 30 stocks. We have 8 Dow stocks that are positive over 94 cents and 3 that are positive, 3 Dow stocks positive over 94 cents and 8 Dow stocks that are negative. So when we take the net results of that, we're looking at 5 negative. We multiply that 5 negative by 2 to get a value of cash. 5 times 2 would be 10. We take the number 10 and we compare it to where futures net change is at. Cash equals negative 10 and futures are trading at negative 9. What this really means is cash and futures are balanced at this point. But on Friday, they didn't close the session balanced. On Friday, they closed with a big discrepancy, okay? That also leads to some of this volatility and corrections to where cash and futures must learn or must balance out with each other, okay? See, there's a lot of lessons to be learned when there's not a lot to be traded, okay? Chris says, look at heating oil. Okay. Oh, nice, okay. Heating oil getting a pullback. There is a leg base group of candles. And the gap fill down there. With this market uncertainty, the probability of traders canceling their orders to figure out what the heck is going on with price is the most likely scenario. Okay? I mean, nobody really knows how to anticipate the news that came out from the new war that erupted. Okay? So even yourself, you're kind of watching, you're trying to find things. Yeah, you have the desire to make a trade, but you're not getting your setups. Okay? You're not alone. Everybody else is the same way. Okay? Nobody's just rushing into the market because we're all concerned with what's going on in the headlines at this point. What's happening? Okay? And, where's the market going to go? Is it going to go up or is it going to go down? Now, many of the novice traders aren't considering that it is a bank holiday. Okay? They're just rushing into the market to click the button. BKX did the round trip. Okay? Yeah, the stocks continue to sell off. Okay? NASDAQ, another breakout and quick pullback. Yeah, if you're not taking really quick profits today, you're probably getting whacked a little bit. Okay? When we use the inside day scenario, okay, where the price is inside, has not broken outside the prior day's trading range, okay, we also have a rule, trades don't happen till later in the session, maybe 10:30, 11 o'clock Eastern. We don't take breakout trades. We wait for zone entries. If you choose to take any trade, you need to be anticipating taking short-term profits, okay? If you stay too long, you kind of get whipsawed around, okay? That's why I'm not jumping in a lot of things. I'm trying to reiterate some of the rules that we have around trading an inside day and waiting for those zones, waiting for the timing. The last 3 times that this has happened over the last week and a half, waiting till a little bit longer in the session, we were able to get in a trade and stay in it for a long period of time, which was, in some cases, was over a 100-point move on the NASDAQ, okay? Patience will pay, okay? Short-term trading opportunities are there, but you need to be quick in and out when we're in an inside day. Dollar continues to pull back. Yeah, let's bring this over. Okay. Yields are closed, bonds are closed, okay? We'll have to rely a little bit more on the US dollar as an inverse alternator. Right now, on the 45, let's just drop down to a 30-minute, okay? We can see that the US dollar pushing lower, which the equity indexes may be pushing higher, okay? Keep that in line. Economic reports, there are none till about 12:30. Okay. Okay, heating oil still pulling back. Let's keep an eye on the stock, or keep an eye on the products that are not the equity indexes at the moment. Wheat's pulling back, soybean meal, soybeans, large time frame zone, pushing all the way back down. Looks like that area has been used. All right, here comes Swiss franc coming around the far outside. Latin's still looking good. Swiss franc is about to trigger. Trading the Z contract. Looking for that breakout, looking for a short-term move, 1.11324. If you are FX traders, you will be looking at, is this Swiss franc, USD, Swiss franc. That means USD going down, Swiss franc going up. Okay. You could look at that the opposite direction, and using some of the FX markets to also see the inverse. So price breaking and support, we do have a leg base. Okay, so the move may be shorter lived. Okay. I also want to remind people, even though I trade futures products a lot, the methodology and approach is and can be used on other products like Forex and stocks and so on. Okay. Oh, there you go, Matt. I was just going over to see what you were looking at.
Order filled.
So Matt posted in the Discord room just a few minutes ago his setup on IWM, which is a Russell. Nice basing. Price broke out and now looking for that zone in the lower 2/3. Nice job, Matt. Okay. And that's on a 20-minute chart. Oh, that's interesting too. Matt also pointing out in the Discord room that everything on TradeStation is listed as hard to borrow. The only thing I can short is the Qs and the SPY. Okay. Now, when everything becomes hard to borrow, that can also lead to that there is a lot of problems coming up, a lot of volatility. Okay. So I want to point that out as well. Everybody say hello to Jimmy. Good to have you. When stocks become hard to borrow, the banks are protecting themselves. It does not mean that the markets will go down. Often it can be just the opposite. Also, if you are trading stocks, beware that even if you're short, the broker can say, hey, you need to close that position by the end of the day. Okay? Now, there's a lot of what we call naked short selling that goes on. Okay? That naked short selling is a product of them selling more than the outstanding shares that are available to be shorted. Often with a stock, only 20% of the float is available to be borrowed to short. Okay? But with stocks, we have the T+3, the trade, and 3 days to get that trade, okay? So it's like they're floating a check. Now, if you went short and your broker filled you by doing some naked short selling, they can ask you to close that position by the end of the session, or they will close it for you, okay? That doesn't mean that you go vengeful to them. If they're closing that position, that means they're at risk of the markets going higher. Now, my experience with that was a trade I took back in the day on Bristol Myers, actually. I had shorted a couple hundred shares of Bristol Myers in this story, and I get a notice from my broker saying, hey, you need to cover that short. And I was like, who are you to tell me to cover my short? I shorted this, I gave you notice. But what I found out later is that the broker filled my order expecting to have the inventory, but see, the inventory didn't manifest in the 3 days, so they had to close that position. Okay? It's like they were floating a check, so to speak. Okay? Naked short selling. There's some really good old YouTube videos on naked short selling. And it's important because what Matt just pointed out is everything is hard to borrow, which means they need to get the markets to go up to get those shorts to cover. And also, if everything is maxed out for shorting, Okay, what is the market expecting? Why are all the big players using up all the float on all the stocks for that naked short selling? Okay. Now, to finish that story, I got vengeful on that and continued to go short on Bristol Myers and learned my lesson that when the banks say there's no more inventory, that the algorithms have to kick in to find those sellers and get the shorts to cover, okay? So, and close those positions. So, anticipate with the stocks that they're going to go up, okay? Look at these equity indexes still being pretty quiet. Couple of little in and out trades. I'm going to clean off. I do want to point this out. We had a great session in the community trading room on Thursday and Friday. Okay, there were some fantastic structure patterns. We were able to talk about the Elliott wave. One of the common pitfalls of people trying to understand the Elliott wave is that you always have to have a reversal pattern, then a trending, continuation. When you have continuation patterns, 83% of the time after a continuation comes another reversal. Okay? Now, in this move, okay, wave 2 was a simple correction or trending patterns like the ABC pattern, okay? Wave 3 and 4 was more of a complex correction where we often see continuation patterns. The trend in is the trend out, okay? So in seeing these patterns unfold, okay, and seeing the map, some of the rules that Elliott left behind for us, okay? Wave 2 does not violate the low of wave 1. Wave 4 does not enter the price territory of wave 1. And the last rule is wave 3 is never the shortest wave, okay? Hi, Chris 117, good to see you. Long time. So a reversal pattern must be present before you have that first impulse wave. So that reversal pattern is often that drop to base, base to rally, and then that pullback where we have an 88.6% retracement. So that reversal pattern comes before an impulse wave. Okay? Yeah, that's with what I've noticed over the years that people that claim to know Elliott wave, they never get wave 1 right, okay? And they never really go and research what Elliott himself said as far as the rules. Because they interpret that, hey, wave 3 is always the longest. That's not it. It's never the shortest. It's kind of like that old phrase, some people say you can't have your cake and eat it too. But you can have a cake and eat it, right? You can't eat your cake and have it too. So it's kind of a play on words. But when you start looking at it, okay, wave 3 is never the shortest, does not mean it is always the longest, okay? All right, so I'm going to clean this chart off. It was just some really good examples because what we did on Friday was that we entered the trade and took these all the way up, okay? Actually, this was Thursday. We waited for that fresh accumulation of orders to come into play, and many of us took the ride all the way up because it started off as an inside day. We waited and so on. So anyways, let's clean this up. Drawing, remove, select all, and click OK. All right. So, step 1, let's find our resistance and support areas and find the easy ones, okay? Once you start doing the easy ones, the chart patterns will start to reveal themselves a little bit more, okay? And you'll be able to see the smaller moves and so on. Step one is we identify resistance or support, and step two is we draw the buy territory and the sell territory. Any trades taken, long or short, the zone must be located in the buy territory, okay? So we're looking for, we got resistance, and as I come up here, we got 3 touches across the top up here. Resistance or support are identified by having minimum of 3 touches, okay? 3 touches of support, 3 touches of resistance, okay? That's what I'm looking for here. So on the 2000 tick chart, I'm looking to find that accumulation of orders. And I don't have an accumulation of sell orders or accumulation of buy orders at this moment, okay? So we're waiting for a new, fresh accumulation of orders to form, okay? All right, so also remember, here I got the NQ up at the moment. Okay, breakout trades don't often follow through on inside days. Zones located in the dead space do not often work. Okay, so we look for breakout trades inside the dead space, but since it's an inside day, breakout trades are off the table. Okay. Okay. As the market continues to drop off, we have one little level right in here where we have some sellers that came in. You have a small buy territory on the other side of support, okay? We made a higher low. Then we got our first little demand zone, 14,983, 14,7 or 14,973 on the chart, okay? Now, fresh accumulation of orders that is formed below support or above resistance, okay? These are great places to take little trade opportunities, especially when you have that dead space below. Using the wrong colors, hold on. Support. Okay, so we're still chopping in the middle, inside day, okay? So we're looking for demand, 14,983, 14,973, or lower, okay? Next demand zone below that, go down to the left, find your 3 touches. Looks like we have a bigger time frame area. We made a higher low. Higher low, often the zones are closer to the breakout point. Make sure you adjust your time frames to find it. Okay. How many are finding that it's easier to wait when you know it's an inside day now? And what are we waiting for? Well, we're waiting for zone entries on trades. We're waiting until 10:30, 11 a.m. Eastern to participate in trades, okay? S&P, still quiet, not inside day, indecisive, no trade setups till price comes to a zone. We do have a trade set up on the Dow, 33,677, stop loss, 33,756. Now, as I get comfortable with using the YouTube Live and some of the new tools and the things that we have going on, please let us know how we're doing, either in the Discord room or in the chat. Things are a little different now, actually quite a lot different. The TMI team, okay, Market Institution team, is monitoring and behind me in every one of the live cast, Mastering the Charts recap and review. And they are watching and monitoring things and posting information in the Discord room, okay? If you didn't get the email or didn't receive an email, you can always go to the announcement tab and pick up the YouTube link, okay, for right now, this week. But using the Discord community room, we have our general chat, which is pretty much the same, okay? Yeah, we got that. Can you guys cover that? TMI team? Yeah, Jimmy's in there. The students helping each other, pictures, information, picture perfect pass trade setups. I want you guys to keep populating that. Any announcements that are coming out, okay, can be found here. This is from the TMI team. And still would like and need people to fill out the testimonies so we can use some on the website. Okay, would love to hear your comments about the Discord room, live trading room, mastering the charts room, course material, just anything that would help us support and a testimony in there would be very nice and appreciated. I don't ask for much, but sometimes we do need a few things from you to help us build out. And likes or shares, yes. All right. Russell, whipsaw. Okay, so let's come back out and start looking around here. Looks like the 5-year is getting a move. Notice these are all weekly charts, so make sure that you see the time frame on that. Crude oil moving back up. We have an order to take the breakout. And also in the chat, if I'm going too fast, you need me to slow down, please post that, okay? Part of the TMI team is my associates that I have down in Indonesia, okay? It is their evening time right now, so my real estate partner, investment partner is down there, and she is managing the team and kind of running everything, okay? That way it frees me up to spend more time with the students and focus on content, new development of content. Keep in mind, Mastering the Charts part 2 and 3 will be coming out over the next couple months, okay? And more products, okay? I don't have a lot of the limitations I did before, okay? I have a great team behind me. We can get a lot more out there. So, yeah, and they're also active in the Discord room to help us with any questions, chat, any comments, concerns. You can always reach out to us at the admin, okay, at themarketinstitution.com, also on the website, okay? So, thanks, Brian. Let's see, Stephen said, trying to find leg base for a short on the ES tick, okay? So let's do that together. We do have 3 touches up here on a tick chart, okay? So I need to find a support area, and when I'm looking for that support, I don't see that I have 3 touches for that gap, okay? And I don't see I have 3 touches of support here yet, okay? So 2 touches of support, okay, you can use, but it's until you get that third one, you wouldn't be able to trade it, okay? We can anticipate where we might find those support and resistance areas, okay? We have to wait for the setup to manifest, okay? So I have a couple of touches right down here as support, but I don't have the third touch in order to have a trade. This is one of the reasons that I was really against, and we're in an inside day, really against trying to make a lot of trades on the equity indexes today, okay? Is there's no setups right now. Even on the tick chart, there's no setups, okay? On the NQ, we do have a sell territory. And let's see if we break this down. I'm going to make a quick little adjustment on this to get all 3 touches. Okay. Now you know the area to look in. You just have to adjust your time tick frame up or down to get that leg base group of candles. Okay. Let's do that.
Order filled.
There we go. And let's go back to a 500 tick. Actually, I'm going to go up a little bit higher. For the NQ. Okay, we are back long on crude oil. When you look at the breakout, still in the overnight session, you have to be prepared for that speed bump over here, okay? Within that speed bump, there is a leg base group of candles. So around that 86.67, 87.07. If price cannot get through that level, okay, or that area, chances are it's going to pull back a little bit before going higher, okay? It's got to take out all the sellers, okay? Now, we are bullish on crude because of the circumstances and the things that are going on in the markets right now. Yeah, Jimmy, if you're in there, the admin team has responded to your question there. All right, so our Swiss franc is doing good. Anybody take that Swiss franc trade? Okay, so let's see, we had that one. Things are quiet here. Platinum's still doing pretty good. Now Swiss franc has triggered. Nice job, Don. Okay. So let's take a quick look at Swiss franc. Let's see where we have some immediate targets here. Okay. On Swiss franc, we have the breakout portion, and we do have the risk management portion where we have the leg base group of candles below, okay? That is a little far away, and the risk is elevated the longer I stay in this breakout trade. I need to see that the breakout trades are often a little more short-lived, okay? As price breaking above this resistance area, we see that things are a little choppy and that we have this speed bump area. Within that speed bump area, there is another leg base group of candles, okay? Yeah, I just gotta adjust the blinds here a little bit. Hold on a second. All right. So target 1.11333-ish, okay? Use that leg base group of candles. Now, this doesn't mean this is a place to take a trade short because it's not in a sell territory, okay? See, it's just one of those drop areas that often get run through because the zone or leg base zone is in the wrong place. Not every leg base zone is the beginning of a downtrend or beginning of an uptrend, okay? Some zones are, well, some leg base areas are just that, for taking some short-term profits, okay? All zones must be in the right location for longer-term trades. Knowing the difference is using that support and resistance in the sell territory or buy territory areas. Now, if price comes up here and then starts to come back down into this demand zone, we also need to be aware that that demand zone right there is inside this dead space. A dead space is defined by 3 touches of resistance, 3 touches of support. The area in between, price often moves through very swiftly, okay? So supply zones or demand zones inside the dead space often get run through, okay? Now, what I'm reciting is a lot of the rules and guidelines that we teach in the Mastering the Course charts, or Mastering the Charts course. Okay, we do have one course coming up. That link is available right now to have you register and sign up. So if you want to participate in that at the end of the month and get caught up so you understand what we're teaching and what we're trading, now's the time. I am liking the metals. Platinum's moving up. Let's go out and look at copper for a moment. Copper, we're trading the December contract. HGZ23. Okay, notice we have price rallied up and it's been basing here. Okay, but I don't have the correct picture to take a breakout or enter the trade at this magnification. What I'm going to do is drop it down to get that right picture. Okay. In order to take a breakout trade, I need to have 3 touches of resistance. Okay, price came up, found sellers, okay? So this is where the sell tickets exceed the buy tickets right here, okay? The breakout portion becomes when price price goes through that area, okay? Now, if you're going to take a breakout trade, you want to look to the left and see if there's any obstacles. So no real obstacles till we get up to the opposing supply zone, okay? Not like it's going to go in a straight manner, but there's not much along the way. There's no opposing zone until we get up a little bit higher, okay? So I'm going to set this trade up as well, 3.6731 or 30. There it is, right at the high of the session. And we'll look to take that breakout trade using a 10-minute chart. Stop loss using a 2-candle pattern, leg base, My stop loss, 3.6525. Okay? So on the copper, looking to take the breakout, opposing zone, 3.7505. Metals are moving up because of the volatility that we have in the dollar, and the yield is dropping below support. Okay, that's a pretty big deal. Okay, but be careful. If the yield continues to drop, the equity indexes could rally. And the FX markets can continue to rally. Okay, so we're looking for that breakout trade on copper. Wow, Swiss franc is a slow mover. Look at Japanese yen blasting, Canadian dollar blasting, platinum blasting, shooting, right? Equity indexes are being quiet. Bond futures are in 10-year, 5-year, and 30-year. Since they're all on weekly charts, examine this area, go down to your small time frame. I'll do it on the 10-year at the moment, okay? So we're looking at a weekly chart, and I want to find a way to get in without going in at a proximal line and putting my stop down here. There's too much risk. So I need to find a chart pattern that I can use to see the turn of this market. So I'm going to drop all the way down. I'm going to start with a 120-minute chart. Larger time frame zones are great, okay, but waiting for price to form a fresh accumulation in that zone is very helpful, okay? So from a weekly chart to a 120-minute chart, okay? One of the signals that we look for, and this is right out of Mastering the Charts course, is when we're looking for potentially a change in direction. We'll drop down to a 30-minute chart, okay? Okay, as we look for when price makes a lower low, okay? So the signal becomes just taking your pivot points. Once you make that lower low, that signals that there's a potential reversal about to happen, okay? So that signal that I just outlined says look up and find your resistance area. So finding that resistance area right around this range here, I'm going to try to encompass all of this, okay? This is still where we have more sell tickets than buy tickets. So all of this is in that weekly zone. So looking to take a breakout on the 10-year above 127 and 22.5, okay? Looking down and left to find the leg base group of candles, we can find that area where we would anticipate if price breaks out to come back down and retest. Okay, where we have a stop loss, okay? Bottom of the hour already. Okay, so looking for the breakout on the 10-year. I encourage everybody to go and break down the weekly charts and find that chart pattern to find where you can get into those trades. All right, crude oil is approaching that first little speed bump area. Looking for price to go inside that zone and then pull back down to find the demand zone using the leg base group of candles. Remember, as part of using the map, when we're using supply and demand, you must have a breakout trade before, and you must have a zone, leg base group of candles before you have a breakout. You must have the breakout before you have a supply and demand trade. And you need to be looking to the left to find where you have the speed bumps and resistance. A couple of things that we talked about in the Mastering the Charts course, okay, is mapping out the structures inside the buy territory and the sell territory. And why is this important? The important part of this information is identifying where that low pivot is and where the 3 touches of resistance came into play. See, when the speed bump becomes less of an obstacle, we have a lot of the 3 touches over on the left and low pivot point in the middle or on the right, then the speed bump becomes less of an obstacle, okay? And we would anticipate that price may go through that level or that area with a high degree of probability. Now, we're aware of the speed bump because as we approach it, we want to be defensive, okay? Now, identifying a leg base group of candles inside the speed bump will then let us know that we could have a short-term area for taking a profit. Now, if the 3 touches here were over on the left and the low pivot point was on the right, then I would definitely be getting out of the trade. But we have a different scenario here. Often when the 3 touches are on the right and low pivot in the middle or far left, okay, the speed bump is less of an obstacle as price continues to move through that, okay? So I hope you guys are liking this. I do like to blend in, especially on inside days. As the markets are choppy, they're designed to take your money. Breakout trades would have whipsawed you back and forth today, okay? Breakout trades are often less of a probability of working out on an inside day. So we wait for zone entries. With the small overnight Globex range, okay, we're expecting more of a trending market, but not till we reach a supply or demand area, okay? The market's still trying to figure out, especially the indexes trying to figure out what's going on, okay? So if you are trading the equity indexes during an inside day, short-term profit taking is a must. So we had a couple of trades that we took here. Let's see, are we still up on Swiss franc? Okay, Swiss franc still providing us. What positions are we in? We just have crude oil and Swiss franc right at the moment, okay? Target for Swiss franc, 1.11324. And we're going to pay close attention to the 10-year yield. We're going to pay close attention to the dollar. As long as the dollar and the yield continue to move down, equity indexes and FX markets, metals will continue to move up. You can refer back out to the Discord room for the setups. Posted everything in there today. You can go back up and find the pre-market routine. Okay. Posted out there so you can see that as far as the prep screen, and you can go back and look at the other charts that were posted out there for this session. The TMI community room is becoming a tremendous resource, okay? Make sure that if you want to know about any announcements or upcoming things that you can click on that, okay? The announcements, okay? Anything from our TMI team, okay, our trading team now. There are some questions about TradeStation workspaces. The ones I posted up here are all for 10.0, okay? You can trace indicators, oscillator. It's a great place for that. I still use TradeStation. If somebody else has a different platform, okay, you can also post in there if you like. Okay. Picture perfect past trades. Start putting your trades out there. Show me that you can see a picture perfect past trade. And I also want to point out we do have the active income channel. Okay. Now the active income trading, this is where I usually will frequent or hang out after I've done the live trading room and after we've done any classes. Okay. I am still an active trader. I'm looking for trades myself, especially on inside days. I realize that some of the zones may not play out till a little bit later in the session. Okay, this is all student-led. Okay, we talk, we chat, we get quiet, we get loud. We all support each other. Okay, so this is where you can find me after these sessions, where when I have time to hang out in there. Okay. So all you do is click on the active income channel and then make sure your mic is mute or open if you want to talk. And there's also other features in there where you can share your screen, a lot like a Zoom session. Okay? A lot of great things coming out. So go out and register if you have not, or send some more people to register on themarketinstitution.com. I'm going to wrap up this session. We are still in the crude oil. Okay? A little pullback, okay, speed bump, and we have our Swiss franc. Until price breaks out of the inside day on the equity indexes, just be patient. Wait for the trades to come to you. Have a great rest of the day, everybody. We will see you tomorrow morning, okay?